Hey traders, Jason here from Levitt Brothers. So I want to talk about the market's reaction to the CPI numbers. Okay, the numbers were released before the opening bell. Index futures immediately tanked, and then steady selling all day long led to the biggest single day loss in over 2 years. So why? Like honestly, like why? When the market reacts in such an extreme way to a number, it obviously wasn't expecting the number, which begs the question why? The number seemed to be a surprise to Wall Street, but it certainly wasn't a surprise to anyone who has their pulse on everyday life. The thinking is, or was, the numbers came in a little bit worse than expected, and therefore the Fed will have to continue raising rates and continue engaging in quantitative tightening. So what was Wall Street thinking? Were they secretly thinking or hoping inflation would tick down, thereby giving the Fed a little motivation to slow down their rate hikes? Did they really think this? And when the numbers didn't tick down, they suddenly realized the Fed was going to be forced to continue raising? Is that what happened? Powell said in his Jackson Hole talk that rates would continue to be raised. In fact, he said they'd continue raising rates even if it meant job losses. He actually said this. And while he won't come out and say it, job losses are what he wants because he doesn't believe simply raising rates and removing money from the system is sufficient to bring down inflation. He wants to force job losses, which will lower demand, which will also help bring prices down. He wants job losses. He wants a recession. He has made it clear that fighting inflation is his priority, even if it means some pain and suffering in the near term. He also wants the stock market to drop. Okay? When looking at the reaction of the stock market after Powell spoke, other Fed governors have smiled and said, yeah, that's exactly what we wanted. They want the market to fall because a weak stock market will have ripple effects and help induce a recession and job layoffs. Okay? The Fed is not interested in threading the needle between doing what's right and making everyone happy. They are 100% full speed ahead fighting inflation, and if that means job losses and a recession, so be it. So again, the question is, why was Wall Street so surprised? And why did it react so negatively? I don't have an answer. Okay, inflation is not transitory. It's not going to just go away. I'll talk about this in another video. The Fed is going to fight inflation even if it means job losses and a recession. I don't understand why Wall Street was kind of sort of thinking or hoping the Fed was going to suddenly do an about face and be less hawkish. Things are going to get worse before they get better.